Hello, welcome to AE 114 or FM1. This is Financial Management. I am your instructor, Miss Maria Angelica C. Balatukan. And welcome to Module 1, Lesson 1 of this course. This is entitled as Financial Management and the Role of the Financial Manager. So the first part of these lesson is a review on the basic finance concepts. So we already learned this in our business finance in senior high school. So we have the definition of finance. It deals with the allocation of assets and liabilities over time under conditions of certainty and uncertainty. It is also defined as the science or the study of how we manage our money. So the finance organization includes the topmost in the administration. We have the board of directors, and then from the board of directors we have the chairman of the board and the chief executive officer. In some companies they separate these roles. So another person is in charge as the chairman and another person is in charge of the CEO position. And then under them we have the chief operations officer. Then under the chief operations officer we have the different vice presidents. Like for example, there's for production, there's for finance, or others may call it as a CFO, and another person for marketing. And under the CFO, since we're talking about the finance organization, we'll focus on the departments under the vice president for finance or the CFO. We have the treasurer and the controller. What's the difference between the treasurer and the controller? Okay, the treasurer is in charge of the custody of the company's assets. So if you're the treasurer in class, then you're holding the assets of your class. And the controller is the one who prepares the records for the items that were held by the treasurer. So in short, the controller will only hold records and books and financial statements, and the treasurer will hold the assets such as cash, marketable securities. Under them we also have several managers. So we have the cash manager, credit manager, capital expenditure manager, you have financial planning manager. Under the controller we have the tax manager, cost accounting, financial accounting, data processing. So primarily the controller is in charge of the preparation of the books of accounts and preparations of the financial statements and other pertinent documents for accounting. Then we have the three areas of finance. We have the financial management, which is our course for this sem, then the capital markets, then investments. Okay, these are already explained in your business finance before, right? So we're focusing on financial management, how to manage the finances, okay, in order to maximize the value of the firm. Capital markets is related to markets where interest rates along with stock and bond prices are determined. And investments relates to decisions concerning stocks and bonds. And finance is important because finance is the lifeblood of any business enterprise. It's like a blood. So the company cannot survive without finance, without money. When you want to find a place where you will start your business, you need money to pay for the rent or to buy the land or to buy the property. If you want to sell items, of course, in order to sell items, you need to have the items. And previously, you have to purchase those items in order to sell them. And when you already started your operations, you have to pay for your personnel, your employees. That involves money. You have to pay for your utilities, your water, electricity. All these requires money. So money or finance is the lifeblood of the business. No business activity can be imagined without finance. It has been rightly said that business needs money to make more money, of course. However, money begets money when it is properly managed. That's why it's very important to be able to manage your money. Efficient management of business is closely linked with efficient management of its finances. Okay, what are the major financial management decisions? Okay, so before that, what is financial management? That refers to managerial finance, corporate finance, business finance, wherein it is a decision-making process concerned with planning, acquiring, and utilizing funds in a manner that achieves the firm's desired goals. It is also described as the process for and the analysis of making financial decisions in the business context. So therefore, what are we going to do in financial management? We're going to plan. We're going to decide where to get the money, that's acquiring, and how will we use money, that's utilizing funds. Okay, so the major financial management decisions involve working capital management, capital budgeting, and capital structure. These three items will be spread throughout the financial management course, and some of these will be discussed in the higher accounting subject. So the working capital management was already discussed in business finance, but we're going to have a review of them and solve problems related to working capital management. So the working capital refers to the firm's short-term assets such as inventory, short-term liabilities, and money owed to suppliers. So short-term assets and short-term liabilities. The working capital management is the day-to-day managing of the firm's working capital. So it's an everyday activity. You have to manage these short-term assets and short-term liabilities every day, such as you manage your cash. You have to decide how to improve the collection of your accounts receivable. You have to set credit standards. You have to ensure that you're able to pay your suppliers on time. You ensure that you can get discounts as much as you can so that you can save money. You have to ensure that you don't get out of stock with your inventory just in time for another order and shipment to your customer. Those activities are working capital management activities. Okay. Then you have capital budgeting. That's the planning and managing of the firm's long-term investments. So it differs from the working capital management because this time it's on the long term. The working capital management is for the short-term assets. So in capital budgeting, the financial manager tries to identify the investment opportunities that are worth more to the firm than they cost to acquire. Okay, the benefits should exceed the cost, right? So therefore, you invest only in projects wherein you will get more than what you spend. Like for example, if you plan to open a new branch, you have to think about it very carefully if it is worth opening another branch. Of course, when you open a branch, it does not come for free. It entails cost. Like for example, you have to construct the building, or you have to rent the building. You have to pay for all the administration costs, pay for the personnel. You have to ask yourself, is the benefits or the income I'm going to receive from this venture, will this exceed my investment, the cost that I'm going to spend? So that is what you should think about in capital budgeting, because this is for long term. For example, another example is when the school decided to build another structure for its classrooms because of the influx of enrollees for senior high school. It's a capital budgeting decision. They have to think if it's really worth constructing a building for senior high school. What if the senior high school enrollment will go down? Okay, will decrease in the future in the next 3 years, and I have already spent millions for this building. Is it really worth constructing a new building? Okay, so these are questions that you have to ask when we talk about capital budgeting. Then capital structure, that's the mixture of the long-term debt and equity the firm uses to finance its operations. So you are going to ask two things in this case. You have to ask, how much should I borrow? What mixture of debt and equity is best? What is debt and what is equity? Debt is utang, liability. Equity is represented by shares. Then how come there is equity? Why is there shares if I'm going to borrow? Okay, so you have to remember that there are two sources of money aside from the two sources of money for the company. Okay, the very first one is from the owners. So if this is from the owners, then that is from equity. When you issue shares of stocks to the investors. Why is there money when you issue the shares to the stockholders? It's because they pay you for the shares. So when they pay you, you receive the money. That's debit to cash and credit to the shares. So that's why equity is a source of money, issuing of shares. Another source of money is debt, utang. If we don't have any personal money, what do? We borrow. So that is debt. Okay, so that's one way to raise money. So this time you have to choose, what are you going to focus on? Is it mangutang or mamaligya og shares? So the mixture is important, because if you cannot carefully plan your debt and equity mixture, there might be chances that you will not be able to meet the payments for your debt if in case nasubraan og pangutang, di ba? So you have to think of the proper or the suitable combination for your company. Second, what are the least expensive sources of funds for the firm? Okay, so if you already chose that you will mangutang ka, or mamaligya ka shares, for example, you decide 60-40, 60 ang utang, 60% ang utang, 40% ang issuance of shares. On the side of the debt, you also have to choose asa man ang pinakamakasave ta in terms of interest rates. Of course, pag mangutang ta, we have to look for the means nga makaless ta sa bayron nun, because interest is a cost to the firm. About equity, ma'am, naapo na siya cost? Yes, naapo na siya cost. Naatay makompute in the future, in the next lessons, cost of capital. Okay, so the cost of capital includes the cost of the debt and cost of equity. Okay, so there are so many things that the financial manager should take note, diba? Okay, so what should the financial manager do? So this is the critical role of the financial manager. So who can be financial managers? You, accountancy students or management accounting students, and of course financial management students. This is your role. You have to take care of all important financial functions of an organization. Ma'am, why is it that the accountants or the management accounting would also become financial managers. In some cases wherein you are the CPA or you are the management accountant, some of them are promoted to becoming CFO, and the major financial decision maker in the company would most likely be the CFO. So you will also take this role. You can and you may also take this role. So it's very important that you study this very, very well. Okay? Because you take care of all important financial functions of an organization. So the person in charge should maintain a farsightedness. What do we mean by farsightedness? Layo kayo kaog panlantaw. Pero dili po nang layo nga nawa na ka sa goal sa company. You have to be farsighted. Dapat imong projection kay dili lang sa pagkakaroon og hasta pod sa future. So you need to look at things in advance, so that the funds are utilized in the most efficient manner, and your actions should be directly affecting, because your actions are directly affecting the profitability, growth, and goodwill of the firm. Okay, so what are your roles? That is raising of funds, allocation of funds, profit planning, and understanding capital markets. Okay, so what is raising of funds? So you have to look for the means where you can get the money. That can be from equity, and that can be also from debt. So it's the responsibility of the financial manager to decide the ratio between debt and equity. Second, you have to allocate the funds. You have to decide asa man padulong ang akong kwarta. Nakakita na kog source. I already found a source of money, but you have to allocate it properly. Okay, so it should be in a manner that is optimally used, meaning at its best use. So you have to consider the size of the firm and growth capability, status of asset, and mode by which the funds are raised. You also have to plan your profit. It's important, dili lang sige lang taog gasto, sige pangutang, pero wala na to gi-project kung naabatay income. Wala ta na consider or wala na to gi-appeal sa planning kung saan na to pagbawi sa ato ang puhunan. Okay? So that should be included in the role of the financial manager. And to understand capital markets, of course, aside from investing in fixed assets, we also have to consider other ways on how to earn money, and that is by trading in the stock exchange or purchasing of securities. Okay, so appeal na siya sa i-consider ni financial manager. Okay, all right, so that's the end of the lesson. Okay, if you have any questions, just feel free to ask your teacher. I have left an activity for you to do so that I can check your understanding of the chapter. Okay, so see you in our next class.